Hello, everyone. Thank you for sparing time and joining with us today. So, before we start, I just wanted to ensure that the logistic is well placed. Can you guys hear me? Are you there, Mr. Munya? Great to see you here. So, you can just use the chat bar, and if you can share that, if you can hear me properly, if you can see properly, then we can immediately proceed ahead. Okay, I'm yet to see any messages. So, all right. So I presume that my voice is reaching. David, can you hear me?
I can hear you just fine. Good morning, Mohnish.
Awesome. Much better. So I would just request, before we initiate the session, begin the session, if you can introduce the participants in a brief way on the chat bar. If you can just introduce the about you, your company, where you're coming from, in just 2 3 lines, it will help us know each other better, and we can have a contextual discussion as we proceed with this webinar today. So can I just request you if you can use the chat window and send a message about what you do, where you come from, and brief about your business in just a couple of lines. All right. Are you guys there, Mr. Munya and Udesh? I'm not too sure if you guys can listen. You can hear me. All right. I'll just wait a couple of minutes and then we can begin the session. Uh, okay. I think there could be some technical difficulties. So I think David, I will just proceed with the webinar. I will just give a brief about today's objective, why we are here today. So at the outset, really thankful for the participants today. I know that you come from different parts of the world, and all of us sitting here equally comes from different parts of the world. So really thankful for you for sparing your time. The main objective of session today is to enlighten and throw some more light in terms of how one can grow their practice and the business from with the help of cash flow as an advisory service. We have observed that the CPAs, the bookkeepers, spend their valuable time with the business owners, and they help the businesses in an immense way, from planning to compliance, all aspects. And one of the important area that has always been is the cash flow management, and there is a huge scope for optimization of the cash flows of business at every level. So this is the today's agenda that we will be discussing around the cash flow, how one can improvise that. And before we proceed, a quick introduction. So I am Mohnish Katre. I'm one of the co-founder at ProfitBooks. So ProfitBooks is a leading fintech company based out of India, and we have been offering online accounting software since the year 2012. Our software, ProfitBooks, is loved by over 75,000 businesses globally. We also offer software solutions to bookkeepers and accountants to grow their practice. And today I'm very glad that we have David Safir with us today. So David is a leading expert in cash flow optimization and founder of David Safir International. It's an educational and advisory company addressing to small businesses. He has consulted with hundreds of international small businesses to optimize their cash flow and improve their profits. As background, as a vice president and general manager of Kodak Latin America, he transformed his division from years of loss to profitability in just 18 months' time. With a master's degree in international management and 20 plus years of working with companies like Morgan Stanley, Dell, and Kodak, He is highly regarded by the business owners and the CFOs. David teaches accountants how to grow their revenue with cash flow advisory through his clear certification program and the mastermind groups. He's a trusted advisor to the businesses with a revenue from a million to 20 million. He has been quoted on several articles in the news stories, and also hosted. He has also been part of dozens of podcasts and television shows as well. So let's get started with David. I will not take much more time. Over to you, David. Glad to have you.
Thank you, Mohnish. It's wonderful to be here. And I'm excited to be teaching both the people who are here live and people who might be watching the recording. Either way, this should be quick, fun, and profitable for the people who are attending. Um, I'm going to jump into it because the whole purpose of being here is to teach about how to increase cash flow from your existing clients. Now, it's focused in on the bookkeepers, but they can apply these same principles with their clients. So we are going to do three topics: cash, chaos to cash clarity. And I'm going to tell you about 5 strategies, and then we'll have time left over for the questions and answers. So there are 6 steps for any business to get to cash clarity. You think mindset is a really key issues. Number 2 is you bookkeep, and that means the people here are having accurate and timely bookkeeping. It can't be a month or 2 later. You got to keep up with it. You model the cash flow. You then learn how to manage your cash flow. And then within a company, you need to organize and form a team, because most people think about the finance department as being responsible. But as you mentioned, Mohnish, it is the entire company that contributes positively or negatively to cash flow. So you got to get the team together and get organized. And from there, you can then maximize or optimize the cash flow within a company. I'm going to go into a couple of these a little bit deeper. The biggest one to me is mindset. It's a challenge sometimes for financial professionals, bookkeepers, accountants to change over to a cash flow mindset, because we're shifting from looking backwards to looking forwards. And it's not anybody's fault. It's just that's the way we are taught. I'm not an accountant, but I took accounting, and I was taught that what we're trying to do is document the past in as an exact manner as possible. We're trying to reflect reality that happened in our books. There's a lot of rules we've got to follow, and we're looking for mistakes to make sure they're clean, documenting everything. And we're trying, as we analyze, we're looking at analyzing the past. So with cash flow, we are trying to predict the future. We get to be really creative how we solve solutions. There is no box. We cannot be perfect because it is impossible to accurately predict every time what your cash is going to be in the bank a month or 2 from now. But I can tell you this: I work with clients all the time that are within $1,000 at the end of the week, or even 2 weeks out, of what their bank account's going to be. It is very possible to get short-term accuracy, but you know what? It's okay if you're not perfect when you're dealing with cash flow and you're trying to create your future. Say, this is what I want the future to be, versus you're stuck in the past looking at accounting data and bookkeeping. There's a lot more to it than that, but one thing people learn today is you need to make that mindset shift. Next, accurate and timely bookkeeping, which is very near and dear to the people on this call. And if you have timely and accurate, you can get a decent forecast. Anywhere else, you're either getting bad projections. And I've had to work with companies. A matter of fact, I just resigned from a company because I didn't resign. I said, we need to stop. Let me know when your bookkeeping is okay, because they had 4 months of bad bookkeeping. And I'm not a bookkeeper, but I know when bookkeeping is bad, it becomes very obvious. And I said, I'm just guessing. So you stop spending money with me trying to fix this, go get your books fixed, and then let's re-engage, because I don't want to just be guessing. You need the timely and accurate. The next one, step number 3, once you have that, you can then start modeling. And it's very simple. It's what's your beginning balance? You add up all the cash you're predicting will come in this week, all the cash you're expecting to go out this week, you subtract, and you end up with an ending balance projected, and you replicate it week by week. Now, here's a caution. All too often, software or spreadsheet models that do cash flow modeling do it by month. Monthly cash flow works if you get paid everything the same day, and you pay your bills the same day, and the rest of the month you have no income or expenses. That doesn't happen. So you need week to week, because what happens if all of your expenses are due the first of the month and your revenue all comes in on the last day of the month? You could end up with huge deficits, but on a monthly cash flow statement, you never see it. So week to week to week, I recommend 13 weeks. It's a quarter. Why a quarter? Because you can see problems coming 2 or 3 months ahead of time with a good cash flow model. And when you have 2 or 3 months to see a problem coming in, that gives you 2 or 3 months to avoid the problem, fix the problem, lower the cash out, increase the cash in, and it might not be revenue, it might be getting a line of credit, but there's all sorts of things you can do in 2 or 3 months. Most people are managing their cash flow by bank balance, and that gives them 2 or 3 weeks, or sometimes 2 or 3 days to deal with the problem, and that's when there's crisis occurs. So modeling is huge to get to clarity. So we don't have time. We decided, Mohnish, that we're going to do a quick webinar, and so the next 3 are manage and organize and maximize your cash flow. So what I want to do now is talk about increasing cash flow with your current clients. And here's the 5 ideas I've come up with. There are other ways to do that, but these are really key. And let's just go straight into payment plans. Instead of one payment of $450, 3 easy payments of $175 each, which I haven't done the math recently, but it comes out to a little bit more than $450. If you can afford it, if the customer has good credit, but I'm not sure what it's like in other parts of the world, but here in the United States, there's TV commercials that are selling products. And they say it's $99, but wait, you can make 3 easy payments of $35. And why do people make 3 easy payments of $35, which is $16 more? Because it's personal cash flow. They can afford it, and they'd rather pay a little bit more, have the item right away, and be able to move on with their lives and make the payments. It's the same thing with businesses or with your consumer clients. If you're doing bookkeeping, some people might be doing taxes as well. So payment plans can be extremely powerful. Commissions on margins. If a company has a sales force, or if you have a sales force, one of the temptations of salespeople have is to try to lower the price. If they are paid on sales and they know they're going to lose a sale, they'd rather sell less at a lower, sell at a lower price than lose the sale completely. But it puts margin pressure onto the company. And the salespeople have no vested interest in profitability in the company. It's top line revenue only. Unfortunately, we as a culture often associate top line revenue as all being good, and it's just not the case. We're going to another later on, there's another thing that says not all revenue is good. So stop focusing only on sales and focus on the margin contribution to the company. Pay salespeople or other key people in the company. If you're going to do bonuses, do it on margin contribution, margin percentage, total gross margin. All those things are critical, different measurements to having a healthy cash flow. Next, accept credit cards. I know some people don't want to accept credit cards because of the cost, 2.5%, 3%. There's all sorts of things out there that said, no, we can do it for a lot lower. Great, if you can find it. But this is like instant factoring, right? You accept a credit card, they take 2.5%. It's less than going to a factorer, and they take 3, 4, 5%. And not only that, you can do it with anybody. Anybody who can pay you through a credit card can use that. It also lowers your risk instead of invoicing. If you or one of your clients is losing money all the time because you're invoicing and you can't collect a certain amount, figure that what that is as a percentage of sales. And you could find that your lost revenue from uncollectible receivables could be a higher percentage than accepting credit cards. And not everybody's going to pay through a credit card. Some people pay in other ways. So that's number 3. This is my most controversial suggestion, is fire your unprofitable clients. And people say, no, I don't want to fire my clients or do anything that's going to offend anybody. And I love this part because I can do a little object lesson and say, okay, that means if your client, you're losing money on them, you're literally pulling out money and saying, here, let me ship you cash out of my pocket every time I ship you a product or I do a service for you. You are literally paying them to do business with you. So step number 1 is always try to fix the relationship. And yes, it's a relationship issue, saying, well, you can just explain, we need to raise prices. We're losing money on you. We appreciate you as a customer, but we can't lose money on you. And work in other ways, maybe a product mix issue, and try to upsell them, or there's a lot of ways to fix that type of relationship. But at the end of the day, if you cannot fix it, then firing them is actually a good idea. And by the way, these are usually problem clients. As I talk to my clients and other people in the industry, the people they're losing money with, it's not just gross margin that you can see through cost of goods sold. It is time. They're usually the ones who complain the most. They're the ones who are the most difficult to work with. And so that's a huge part of it. And if you really want to help them, you can refer them to somebody else who would appreciate their business. And I would say refer them to a competitor so your competitor can lose money instead of you with unprofitable clients. So I guess that was the 5th one, but here's one more for you as a bookkeeper, as an accountant, and that is providing cash flow advisory services to your clients. They are asking for it. Now, they won't say, nobody's ever said, David, I want you to provide me cash flow advisory services. What they say is, I'm concerned about my margins are going down. I'm concerned about my bank account balances, making payroll. Those are all symptoms that they've got an issue with cash flow. So if you're hearing clients, and I know you do have clients like this, or if you're not hearing about it, it's because you're not asking about their business and just finding out generally what's going on, then if you've got clients like that, you have an opportunity to advise them. And by the way, you can actually tell just by looking at bank account balances. Are they healthy for the amount of revenue that's coming in? You can tell by looking at their debt. Is their debt going in one direction, which is up? Constant increasing debt is an indication of cash flow problems. Now, They might not feel it yet because they've got more and more debt they can bring on, but they're going to hit a wall eventually. They'll run out of credit. So advisory can be extremely powerful to solidify the relationship and to be able to provide services well beyond bookkeeping, and in addition, and make them a sticky client, meaning they're less likely to leave you if you're doing advisory work. So that's it. That's the entire presentation for today, except for we're going to take Q&A. I want to leave this up because if you want to talk to me more about cash flow in general, whether it's your companies or your clients, or if you're interested in learning about the advisory courses that I teach to bookkeepers and accountants, go ahead and schedule a call. There's the email. Oops, I didn't realize my antivirus was sitting there the whole time, I guess. Sorry about that, everybody. So there you can see it. There's my Calendly link, and we can do Q&A.
Thank you so much, David, for that sharing the insights and even your practical examples on all those aspects. I understand that the time is very short to cover all those 7 points, but you did it justice in terms of sharing about all those 3 points. So I would request the participants, if you have any questions in your mind, it could be any situation when you are dealing with clients, or if you have any particular question with respect to starting it as one more vertical for along with your bookkeeping practice, or the way you are engaging with your SME clients, feel free to type your questions in the chat window so that we have this opportunity to ask David directly right here itself. So you can use the chat window and the messages, whatever you are sharing, or if you can just let me know, I can uh, open the stage for you, and you can directly interact by switching on your video.
So just one or two more things, Mohnish, as people are maybe generating some questions. Right now, it's the end of the year bookkeeping. And one of the wonderful ways to find out about the challenges that companies are having with cash flow and other parts of their business is just by having a brief meeting with them to discuss the books. I know sometimes we do it, everything automated, arm's length, emails, chats, uh, folders of storing things, and we do it for efficiency's sake. However, effectiveness with this type of an issue with cash flow is having a phone call or a video call is even better, and or in person. So often today I forget about the in-person relationships, but to sit face to face and talk about what are your challenges, or you might be able to point it out and say, listen, I noticed that your bank account balances seem fairly low compared to your amount of revenue. And is that a concern of yours? Or you can just simply ask them about what their challenges are. And it opens up dialogues. Now, of course, this doesn't work for every client. Not every client wants to share, but there's a certain percentage for the bookkeepers and accountants I am working with. They see, well, one one of my accountants, he's in Canada, indicated that 80% of his clients have cash flow issues, but they don't know it. And so he has started working with them one at a time. And 10% approximately of his clients are saying, yes, I would like to help with managing my cash flow. Gives you an idea, the opportunity.
Awesome. So, till the time the participants are thinking and drawing the questions, I thought I'll also take this opportunity to ask questions. So, there are, I mean, people who are taking charge of bookkeeping, who are participants today, they have access to a lot of data. But the objective right now, but in most of the time, is more of compliance or giving the prepared data transactions getting recorded, and bookkeeping is the only focus. I've seen when I interact with bookkeepers, there is a common assumption that by default the data is getting interpreted well, or I mean, the
Mm.
point you mentioned that they are not aware that there is a problem, but there are symptoms of the problem that they are not doing well or they are short of money to pay things on time or whatever. But so, do you have any particular framework or process which it goes through your courses or through your consultation, through your diagnosis? So, is there a step-by-step process, or how do you assess? You can throw more light on that.
I do not have what you would call a step by step process because different companies have different issues, with the exception of analyzing the past. So the past is very useful for trying to understand issues. So, for example, on whether it's the balance sheet or it's the P&L, I run reports by week or by month. For monthly seems to be the key, and you look for patterns. For example, if you're running a balance sheet by month, and you can start seeing your short-term liabilities going up and up and up without a, an obvious reason, especially if it's accounts payable. And if revenue is exploding, that makes sense because you'll owe more people money. But if revenue's flat and you're seeing increasing payables, or if you're seeing increasing liabilities, then there's a question about, okay, why? What is happening? And then you'll want to correlate that to bank account balances. If the bank account balance is going up and up and up simultaneously, they don't have a cash flow issue. They have a controls issue of getting their bills paid or using credit where they shouldn't be. But oftentimes you'll see the balance going down. Same thing with a P&L can help. Analyzing it by week or by month can help you find mistakes, which, yes, even though we're all professionals, we all make mistakes. When I used to do my own bookkeeping, I'd make mistakes, and this is how I'd find it, is I'd say, wait a minute, I'm spending $10 a month, and all of a sudden this month is $500. Is that right? And you dig into it and you say, oh, okay, that's right. Or you go, oh no, it's misclassified. But my point is, mostly you can learn about trends, and trends and anomalies is what point to potential issues. Um, the
Yeah,
big one.
yeah,
So let me give you one more thing, which is counterintuitive. People often think that cash flow issues are caused by declining sales. You can have issues, but the really big problems come from companies that are growing too quickly and need cash up front before they get paid. You could need it for 30 days, 60 days, 90 days, and more cash to fund the growth. And that's when companies get into big problems.
crazy. Awesome. And maybe just one more question. I think participants don't have questions, or they might want to reach out to you directly later on. But just maybe when you're dealing with clients and they are already having cash flow issues, some of them in critical mode might have a negative cash flow also. And what could be the best way to pitch the cash flow as an advisory service where the accountants and the bookkeepers can do a charge in an appropriate way? Because knowing that the client is already in a negative cash flow, what could be the appropriate way of pitching, or ensuring that the bookkeepers also get paid well for their advisory towards cash flow?
That's a great question, and you bring up a key point. So there's two things. Number one, letting people know that you can help them is a huge relief. Companies often look at bookkeeping and accounting and tax preparation as an expense. However, cash flow optimization can be presented as an investment. So there's two things. Number one, you have to let them know it's a separate service. We all have heard of scope creep, where they think you're going to do more and more for the same amount of money. So you have to make it very clear this is a separate service I provide with a separate fee. And then identify the fact that because oftentimes it's more money than you're charging for bookkeeping every month, and say, but the difference is that you will see a return on your investment, and I will find you the cash that will pay for not only for my additional fee, but 5-10 times over. If there's a $2 million company, I am confident that within a day, I could find $100,000 of cash flow improvements for any $2 million company for a year, 1 year. And much of that would be ongoing improvements, which would be bottom line profitability and or how to keep things that you want low, and how to keep things you want high. So that's after years of experience, but that's the type of return on investment people can expect. And when I say a day, it might take me 1 to 2 weeks to help the company implement them, and they move on with their lives.
Interesting. So it will be very important, as you mentioned, that quantifying the value in terms of how much cash flow can be optimized. That could be one starting point of discussion. Interesting.
And the interesting thing is, you'll know some of this. One of my students, again, this is the accountant out of Canada, felt guilty because it took him about 15 seconds to figure out a solution that was going to save the client tens of thousands of dollars in taxes over the course of the year. And he felt guilty for charging them because it's so easy. And I said, well, no, telling them was easy. What was hard was all the years of tax returns you've done and studying the tax laws and understanding it. That's where the value is. And so this again is a mindset shift that our value is by the hour or by the monthly project, to value is in the ideas and the benefit that our clients receive.
Interesting. Very, very rightly put up. I mean, it's not the amount of time we spend, but the value what is brought on the table should be charged.
Exactly. Yes.
Awesome. So I would just request participants if there are any questions, or we can just wrap up the session for today. So you can have a one-to-one conversation with David with respect to any live cases you have, or any questions you have with respect to the cash flow advisor services. I will email the link to you after the session, so where you can schedule a call on Calendly link and take the conversations further. So thank you so much for spending your time and being part of this today's session. We will bring you more such sessions which is going to add value to your practice, and we would love to remain in touch. Thank you, David, for sparing time and sharing your valuable insights.
Thank you. It was a pleasure to be here.
Thank you so much. So we just end the session for today. Thank you. Have a great day.